Hi, this is James Shug at Westpac with the end-of-day report for Wednesday, December the 14th. Very much a risk-off day today. In European markets, we saw a negative reaction to the Federal Reserve's failure to announce further stimulus, or at least hints of further stimulus in the US. US markets, of course, sold off after that yesterday. European markets were closed. They reflected that weakness today. But also there was a sense that there's a real lack of progress going on in terms of resolution of the European sovereign debt crisis. No real concrete developments to sort of pin market weakness on, just a sense that there's a real lack of progress coming through since the summit last week, which itself didn't really deliver too much substantial. Certainly concern about European bond markets was heightened today, when the cost of insuring various sovereigns' debt rose to record highs. On the data front, we did have an industrial production figure for October. It fell 0.1%. Having fallen in September as well, that's the first back-to-back decline in European industrial production since March, April of 2009, when the economy was in recession. That added to the negative sentiment as well. Also in the UK, we had another rise in unemployment in November and a further quarterly decline in employment, such that over the last half year, more jobs have been shed than were put on in the previous 2 quarters. So that added to the negative sentiment in UK markets as well. US data, not much to focus on today, but ongoing disappointment, I think, about the lack of Fed commitment to put in place further stimulus, which we didn't expect to see at the meeting, but nevertheless markets have chosen to react negatively to that. I think part of the story too is that volumes are actually very thin heading into winter. A lot of players have simply left the market for the year, not wanting to participate in what could prove to be particularly costly market movements. We're still getting some pretty significant shifts, particularly in equity markets and in bond yields, on the basis of some pretty minor news. That was certainly the case today. Just to give you a feel for that then, we've got the London market, the FTSE, down 2.25%. The French market's down 3.3% today. The German market down 1.7%. It's after 5 o'clock, so those markets are closed, but the Dow's still trading. It's down 1.1% at the moment, looking at 11,823 for the level of the Dow at the moment. In commodity markets, some big swings there. Oil prices down almost 4.5% today at $95.67 a barrel. The general risk-off attitude certainly was the major factor there, but we also did see OPEC lift the output limit for oil today, reflecting the Libyan and Iraqi oil coming back online to take account of that. That may have had a further downward impact on the oil price as well, but other commodities were down sharply too. In fact, of the 19 I've got here, not a single one posted a gain. Gold prices down almost 5% today, $1,583 an ounce. Copper prices down 5% today as well. The Aussie dollar was hit by all this. It's at 99.05 against the US dollar at the moment. It started the session today at about 1.004, so we're looking at almost a 1.5 cent loss in the Aussie, and it's moved back down through parity against the US dollar. At one stage it was actually trading below 99 cents. In terms of the economic data to watch in Australia, we've got a bunch of things coming out. Remember, we had a weak consumer sentiment report yesterday. We got the quarterly Westpac ACCI industrial trends survey coming out today, and also unemployment expectations, inflation expectations, and auto sales. So a bunch of things to focus on in Australia, but the main driver is this concern that the global economy is suffering because of the lack of policy impetus in Europe, and also the apparent unwillingness, at this stage at least, of the Fed to put in place further stimulus in the US. Okay, that's it for today. I'll be back tomorrow.